Rohr here with an early, critical, concise highlight early on Thursday, March 5th, 2015. It's currently 6 a.m. U.S. Central Time, and we're coming to you this early with a brief update because we want it out there well ahead of the ECB press conference at 7:30 a.m. U.S. Central Time. And to discuss the background factors, the data is still mixed, but it's also quite moot in light of the influence that ECB press conference will likely have across the various asset classes. So what does all this mean to the markets? And right now what we have is the short-term charts, hourly on the left, 30-minute on the right as usual, of the U.S. S&P 500 March futures contract. And that is currently, again, all that bad data elsewhere, it's currently up 3 at 2099 after trading up to 2,100. Note also that 2,100 is just about where it stalled yesterday on the rally on its recovery from lower supports. Now, it's been a big issue here with us that even though the market was kind of soggy after Janet Yellen's testimony that put it up out of Tuesday into Wednesday of last week, it was weak late last week, and after a rally on Monday back up to the 21.15 to 17 resistance, gap lower Tuesday, and sag off below 2100 and gap lower yesterday. But with only some minor slippage, this only got the market back down to that key 2088.70 old high from back in December, prior to the sustained reaction into January that took it all the way down to the upper 1900 area. On present form, also looking at the short-term tendencies, a couple of other things are worth noting. Number one, that it's on an up break on the short-term chart from overnight. So the burden of proof is on the bears, interestingly enough, to put it back below roughly the 2095 area, which was just about the low going back to Tuesday's sell-off, number one. Number two, heading back over to the hourly chart, you'll notice that the hourly MACD had slipped below the significant lower runaway band at 2 under and finished the day by stabilizing back off of that. And unless it comes back under pressure fairly early today, that's a constructive sign, along with both the hourly and the 30-minute stochastics being up at present. If it should rally, of course, the first resistance is back up here at around 2100 and even up to about 2104 to 06. However, much above that, there's probably not much preventing it from either going right back up to 2115 to 17 or up to the higher resistances out up into 2130 to 40 this week. And that pretty much does it for the short-term view of the S&P 500.